The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Lanai, Hawaii edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. For everyone out there is having a great day, let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon, East Coast, 8 a.m. my time. And I want you to know that I'm actually grateful for your presence here. So feel free to go ahead, pick up that phone. You can dial on in, 877-927-6648. Hey, if you can't dial in, you can let your fingers do the walking. You can send me an email, steve@tfnn.com. I'll do everything I can to get to your email request. Just please, in the subject heading, put radio show question. Of course, inside the Tiger's Den, any ping will do. So live from Lanai, Hawaii, this is Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 175 points. That's the beauty. S&P's up 21, NASDAQ up 94, Russell 2000 up 8. Lead the charges, the NDX 100 up 1.4% out there. The trannies, the transports are back 23 points. Gold's off 350. So we have plenty to look at. Of course, I want to look at what you want to look at. Right now, lead the charge here to the upside. You've got Priceline up 44 bucks, Amazon up 13, Google's up 13, Baidu's up about 12. To the downside, it is Equinix, EQIX, down $27. Alliance Data Systems off 10. That's 6% and 4% respectively. So we do have some movers to the upside and some movers to the downside. But where should we start? Now, because of the surroundings I'm in and some of the technical stuff, I will be posting charts into the den, posting charts into TigerTV. So it just takes just a tad longer. But the first place where I think that we should start is with the market breadth for the S&P 500. So as nice as this move has been, the one thing that you and I are going to be looking for next, just to confirm that we're headed back to the highs and higher, we want to see the market breadth for the S&P 500 turn back to bullish. And what I mean by that is if you take a look at this chart right here, the red line reflects the number of issues inside the S&P 500, that would be 110 right now, that are trading below the bottom of their box. When you trade below the bottom of a box, the simple meaning is that it is sellers that are in control. So when we take a look at market breadth here, we also see the green line, which represents the number of issues trading above the top of their box. That's 101. We do have 290 issues trading in between the box, and so that's either, that's kind of a neutral area. You can play it to the upside from the bottom to the top, or to the downside from the top to the bottom. Of course, you want to understand the structure of those boxes, whether they're bullish or they are bearish. But what we can see right now, at about 1:10 in the afternoon, we do not have a bullish crossover. Now, why do we pay attention to that? Well, look, if we just use market breadth as a tool to guide us as to which side of the trade to be on August 28th, 2017, I take that back at, let me give you the exact time and date, August 29th, 2017, and that was in the morning. So as the clock struck midnight, the message was go long the S&P 500. And it was like that all the way through the time period of where that crossover, the bearish crossover, that actually took place on February the 1st. So right now we are very close to seeing whether or not this is going to give the market breadth bullish signal out there. So and now so that's with regard to the S&P. How about the NDX 100? Because we should really go look at that as well. And so let me do this here. Give me a second here to, I got to do this. I can do it. We've got 3 minutes, so just got to bear with me here because I don't know what the NDX 100 crossover looks like, and we really want to find out what that is. Oh, good Lord. Okay. Here we got the NDX. Oh, boy, we have something to certainly take a look at out here. So let me see, how do I do this? There we go. It's so easy when I'm normally with you on my other system, but here we can get through these technical details. So now I'm going to post for you the market breadth calculation for the NDX 100, and here's what you're going to see. We have a bullish crossover right here, right now. I know it may be small for you to take a look at, but if you look over on the left-hand side, it gives you those market breadth statistics. And what you're going to see, as of 1:12 in the afternoon, you have 27 issues that are trading above the top of the box, 23 below the bottom. Now, we're looking at a daily chart, so we don't really know what the end-of-day data is going to look like. But come 3 hours and 48 minutes or so from now, we will. And if there's a bullish crossover, the message here, especially for the NASDAQ, is do not, not be short the NASDAQ 100. The last time you saw a bullish crossover was back on September 27th, and that also was at midnight out here. And that crossover lasted all the way up until February 1st as well. So if you can go ahead and fight the trend, you can fight the market breadth, but I suggest not. So what we can pretty much say is if the NASDAQ 100 closes where it is right now today, let me see where it's trading here. We'll pop that up on the screen. The NASDAQ 100 is trading at 67.72. I'm just going to try to give you a guideline. It's up 96 points out here. If it finishes like this, and there's no sell-off during the day, the message is clear. We're going back to the highs. And market breadth has crossed over. It doesn't tell us when we're going back to the highs, just that we are. So if we take a look at those highs, let's do this by opening up the QQQ series ETF, because I did get an email over the past couple of days to see if I can get this thing to populate for us slowly but surely. And there was a question about, Steve, am I concerned with the volume that occurred inside of the QQQs and that we're going to go back down and revisit that level? And I wrote back because I didn't get a chance to do the show yesterday, and I won't be able to do the show tomorrow. But the answer is, and I'm going to go ahead and my response was no. In fact, that is how the QQQ series ETF makes bottoms. So hopefully this chart here posted in the screen, you're going to take a look at the Qs. You'll see 2 green arrows there. This is the daily chart that we're looking at. During this break, I'll put up the chart. We'll go back. Go look at those high volume bottoms. That's what they are. They're bottoms. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back up, folks. So we're taking a look at the Q-Series ETFs. This is a result of a question that came in since I was last with you on Tuesday. And the question was whether or not I was concerned about the big volume that occurred inside the QQQ Series ETF last week. When I say big volume, there's 522 million shares that traded hands. We haven't seen that, quite frankly. I don't know if we've seen that type of volume on a weekly basis since down around 2009. But here's a chart that you're looking at. It's kind of scrunched in there, but so I can give you as many data points. You can go do this. Each of you have access to the Q charts out there, and each of you have access to the volume. So it's about the easiest thing to do out here. And this is on a weekly basis. You can see those bottom formations occur on a daily basis. But this, in essence, as Dave White likes to say, this proves the point that the Qs make bottoms with volume out here. And so all the green arrows that you're looking at on the charts are these high volume threshold type of days, with last week being the most significant. You'll see, with the exception since 2013, and when I say exception, I'm using the week of January 11th, which did 336 million shares. And by the way, it was a bottom for about 2 weeks. Then the market went lower, just slightly lower, inside the Qs February 8th, where it did another 350 million shares. And what was that? That's a bottom with volume. It just is. Last time we saw these bottoms with volumes, they were back here during the week of June 26th. June 26th, market obviously moved. So this is a gift when you start to see the big volume occurring inside of the Q Series ETFs. Now, we're taking this really step by step, right? We're taking a look at a series of different charts that help you and I to identify tops or bottoms, or at least help you to identify which side of the trade you should be on. At this stage here, inside the NASDAQ, we're taking a look at the Qs. You've got a bullish crossover with regard to its past market breadth. If it ends the session today, at the end of the day with that signal, you know that message is be long and strong. If we take a look at the volume inside the Qs on a weekly basis, it's also giving us the same message. But look, we have more. We don't have to stop there. What we can do is we can go take a look at the market breadth of the advanced decline information, turn that into an oscillator, difference between two exponential moving averages, those being 19 and 39, and we can go see what their message is. So when we go take a look at their message, what we're going to see right now is we're going to see that in the New York Stock Exchange, and I apologize, it's all scrunched together. My screen is relatively small, but this will at least be able to allow you to also see what it is that I'm referring to. What I'm referring to in the New York Stock Exchange is that as of right now, 1:21 in the afternoon your time on the East Coast out there, you can see that the oscillator, the difference between those two exponential moving averages, is now above zero. 23, 50, I don't know, because this changes basically every few seconds. The number that posted is going to be somewhere around the 22, 23 level. If this market breadth data oscillator closes above zero, what it does is it tells you that the bulls are in control. It tells you there has been a change in trend. Now, the confirmation would really come tomorrow, right? And I say right, but you're saying, what do you mean right? The reason why the confirmation would come tomorrow, have you ever heard of a false start? I don't know, in the Olympics they must have false starts, don't they? Well, the markets themselves can also have false starts. And so what you use as the guideline is if you see these oscillators close above zero, which they are, by the way, in the NASDAQ composite, they are inside of the Dow. The VIX index on the bottom right-hand panel of the chart that I posted, that's headed to 1601. It's now back inside the Bollinger Band, the top of the Bollinger Band, which is 2081. As long as the VIX doesn't close above 2081, it's going to 1601. And once it gets below 1601, it's going to 588, 688 is what the number is right now. Now, those numbers will change over time as more data comes in. But we have three primary indices where we're taking a look at the wide swath of market breadth. The Qs, obviously, we're dealing with 108, 109 issues that are inside there. But here we take a look at the New York Stock Exchange. When we take a look at the NASDAQ composite and the Dow, right now, they're giving you that bullish signal out there. What's the last real piece of information? Well, there's a number of other pieces of information that we can use, but let's do this with the next few minutes because we can come back to that. And we did have a question come in from Tim. And Tim, I don't see his email right now, but that's okay. I know what he was asking about. And Tim wanted to take a look at ticker symbols AYR, which is Aircastle Limited. So for Tim, let's go take a look at first, what are the message, or what is the message of AYR, Aircastle, on the daily, the weekly, and the monthly. And we just start off by using the market breadth. And we can see on a daily basis that price is below 2168. That was the bottom of its box. That was a bullish structured box. What I mean by that is the center line at 2260, much closer to the bottom, versus the top at 2442. So when you close below the bottom of a box, this is saying bearish, bearish, bearish. Now, you have to be able to have skills to go out there and identify when is there a bottom that is going to form out there. Well, we can also look at the weekly chart. In the weekly chart, the bottom of its box was 2129. So, Tim, this says that price, if it breaks below 1988, 1988 is the key. And 1988 has been tested this week. And 1988 represents the center line of the box on the monthly chart. So far, that's held as support. That monthly chart is a bullish structured profile. If price closed below 1988 and you're looking to get in on this equity, then you want to watch what happens around the 1795 level. So that's what's going on with regard to Aircastle. I'm going to open up my chart a little bit further just to do a bit of further research on this. And the research that we want to look at is what happened. Let me see if I can draw a line. Well, I know I can draw a line. It's a matter of doing it and then posting it so that you can see exactly what it is that we're taking a look at. But exactly what, shoot, these are blue lines. Oh, well. Let me see. How can I change that? I'm not going to even worry about changing it. Let me post this, and we'll just kind of walk through it. So the other thing that I am looking at, Tim, is the trading session from the day. We're looking at a daily chart out there. The trading session from the day of September 8th had 259,000 shares traded. And when price closed below that, it was with volume of 500,000 shares. It closed below that on February 13th. So this really is communicating to us that it wants lower prices. So for now, for our sake, where we believe on a daily basis that price is headed back to is the November 1st swing point. Now, that has 1.4 million shares. the high of which is 20.36. You're trading at 20.36 right now. If this week price closes below 20.36, what this suggests to us is, first, the volume of 1.4 million shares, we're nowhere near that on a daily basis. And so if it closes inside that swing point with light volume, which it undoubtedly will, that's below 20.36, then this should head down to about the 18.26 level. And there would be your buy. The only other possibility is you reject price. You keep rejecting price here. That's the level of 20.36 with light volume, and you close above it. And then it's a riskier trade, but perhaps bottom is formed. That's inside Air Castle, AYR. We get back. Gold for Peter, Park City. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other Tigers and Tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Inside our Tigers Den, wanted to take a look at ticker symbol AJG. That's a Gallagher Arthur J and Company. I was at a bar in Maui on Saturday it was, and there was a musician that came on, and he looked just like Gallagher. I don't know if any of you have ever seen Gallagher. I don't know if he still tours, or I'm sure that he does. Comedian, kind of one of those filthy, dirty comedians, but one of his classic things to do is, I'm sure it still is, to take all these watermelons, and if you're sitting in the, it was in Clearwater, if you're sitting in the front rows or what have you, and those people who know him, know his shows, bring all this, plastic to cover themselves because he sits there with a sledgehammer and just smashes those. It was funny the first time you saw it, but it kind of. But in any event, that's why I thought I saw Gallagher playing the ukulele a couple of days ago. Turns out it wasn't him, but sure looked like him. In any event, A.J. Gallagher got me off on that subject matter, and the real question from Harley wasn't, does this remind you of Gallagher, the comedian? Just is this going to head back for its highs? And the answer is, it looks like to me that it is. Prices above the weekly profile, prices above the monthly profile. Sorry, Harley, I can't get the dailies to populate. Just too many things going on inside of my computer system right now to be able to give that to you. But yes, it does look like to me it's going to go back in that 70-49-ish area. That was the high from January 26th out there. So I hope that helps you out. Peter wanted to take a look at gold, and specifically wanted to take a look at gold priced in euros. So we see that gold has pulled back a bit today. What a beautiful day gold had yesterday. And what a beautiful trade for, I forget who was asking about the GDXJ. And we said, yeah, stay in on that trade. So that was a beauty, especially because of yesterday's move to the upside. And at this stage here, Peter, what we have seen since the February 7th level. Did I post that chart? Jeez, I don't even think I posted it. So here I'm talking about it. I'm not even posting it for you because I'm used to not having to post it for you. There you go, Peter. So here's the chart. And the low of gold priced in euros on this recent pullback out here in gold occurred on February 7th. And what we have seen since then is a series of higher bottoms. So it's telling you and I that gold has actually started to turn up in euros as well as dollars. The real key here for any of us that are long metals, which I am, which subscribers are, yesterday was a beautiful day for us, is that we really need to see gold priced in euros get above that little horizontal red line. And that's right around the price point of like 1108, 1109. If I try to get the exact number for you, I don't have a data box to do that. And then what I just did just screwed up the chart. Well, that was a smooth move there, Steve-O. Do we have a breakout signal or anything like that, Peter? We don't. What we can do, though, is we can go take a look at the TAS market profiles for Goldilocks. So let's do that. Let's go ahead and punch this in here. Give me a moment. I'm going to try to set up the data boxes so that you can sort of see everything out here. And this is really going to be the key, or what I believe will be the key metric that you'll want to look for, I'd say tomorrow. Tomorrow, unless something wild happens, today. Did that post? Let me see here. Let me check it out, see if it posted. I believe that it did. Yeah, it did. So, Peter, what I'd be looking for on the right-hand side of the chart is that is a bullish structured weekly profile. It's been around for 2 weeks now. We're in week number 2. And where price moved up to yesterday was the top of that box. Clearly, it got above it just for a bit. That's 1357.70. We're trading slightly below it, about $4 below it. If price can't close above that level, then what we'd have to do is say, well, where is the daily profile? And the top of the daily profile is at 1354.30. So we're basically trading on that right now. So what you'd really like to see some type of breakout, because that was a bullish structured box as well, is you really don't want to see that act as resistance. Doesn't mean that it can't blow higher. It's just you don't necessarily really want to see that act as resistance out there inside of gold. So gold has explored its boxes, both the daily, which formed 3 days ago. I think when we were on the air, on February 13th, we noticed that box. And that was one that suggested price should move up. It moved up to where it was supposed to move. And now what we want to see price close above that level of 1357 or 1354. If it can trade above 1357, close above it, then what we have is what we'll call an old-fashioned breakout with regard to its TAS market profiles. So I think that covers all the questions. Let me check the email out here, because that's really what's most important is you. And so let's see. We got Tim's, so we're all set. I don't see anything. Oh, was there anything else in the den? Did somebody want me to look at something else? If so, because I have such limited space, would you be kind enough just to retype in what it is that you want me to take a look at? I will be happy to do that. Now, speaking of profiles, Let's just go over and take a look at the equity futures contracts, because I don't believe that we have done that. So we want to go ahead and add that to our read of the message of the markets. We talked a lot about the Qs, or the NASDAQ 100, and that also means we really should go take a look at what's going on inside of the NQ out here, right? What is it that you should be looking for? And here my focus is going to be on the, let's see, what time frame? The second chart is the daily chart. Oh, yeah, because we're looking at all four. Each of these are daily charts. Hello, Steve, what time to wake up? It is early in the morning. So here's what another area that we're watching, right? So on the NDX 100, we've got, as of 136, we've got a bullish crossover. We have the advanced decline reading above zero for its advanced decline oscillator readings. That means bullish. The next big piece of information for the NQ, and we're likely to see it, is going to be a test of 68.23. 68.23 is the top of this box. We've gotten up to 67.84, I believe, 67.83. So we're close. Does it have to get up there? It doesn't have to, but it likely will, you know, based upon what it is that you and I have looked at in the market. In fact, the Russell 2000 is also going to be another indice equity futures contract you're going to want to watch, because if the Russell 2000 can close above the bottom of its box, the bottom of the box being 1532.40, and we're at about 1529 right now, that's going to be inside the range of that box, which could take you all the way up to the 1612 level. But I think the key here, as we looked at the high volume low in the Qs on a daily and on a weekly basis, as we looked at the market breadth on a daily basis inside the NASDAQ 100, as we looked at the NASDAQ composites advanced decline oscillating above zero, the final piece to this puzzle, the final ingredient to this amazing meal out here is going to be the 68.23 level. And if you see the NASDAQ, the NQ close above that, then what you've got is a real breakout party. In other words, the message says, hey, Steve-O, hey, Peter in Park City, hey, Z in the Den, Harley, you name it, Polar Bear, then the market wants to go back up to its highs out there. So that's what's going on inside of the markets. If you want me to take a look at something, go ahead right now. Either give us a call at 877-927-6648, or let those magical fingers do the walking. Send me an email, steve@tfnn.com. Inside that heading, just put radio show question. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Phil writes in, and Phil, thanks for writing in. He says, hi, Steve. The ES and the S&P 500 are testing the 50-day moving averages here. Do you pay attention to these or ignore them? Instead, use the TAS market profile, Stevie's red line. And so I do not use those moving averages. I don't take a look at where price is trading in the 50 or the 200 or the 20, and I'm not saying don't. We have individuals, Garo in California, who uses some moving averages along with the parabolic SAR, and it has made him a small fortune. So what you want to do, Phil, is just identify a set of tools that work for you, give you a high probability of the trade out there. Just because if I were to use, I think I use enough tools as they are to assist me in calling the markets. And if I add more, even more, not that I don't go looking for them, because you're always looking for little nuggets, little piece of information to assist you with the trade. But if I were to use more, I could end up adding so many tools and so many conditions that it would keep me from entering the trade. And so I don't want to do that. Just simply, so if they work for you, that is wonderful. Instead, for example, like what am I watching right now? Because since you mentioned my red line, here's the Dow Jones Industrial chart that we're posting. And where the Dow trades at in relationship to Stevie's red line out there, which is 25, 143, 144, somewhere right around there right now, because that's always going to change, is really important. At this stage here, the Dow has not taken out Stevie's red line, meaning close above. Close to a test of it, but it hasn't done that. If it closes above Stevie's red line, so what that tells me is I now am back to a rising price oscillator above zero, and that is a bullish condition. And that would say to me that the proper side to be on the trade for the Dow or being long the Dow would be when price closes above Stevie's red line up. There's nothing more bullish than a rising price oscillator above zero. Do we have that condition now? The answer is no. In fact, the message here of the Dow Jones is that this still could be a counter-trend rally in its indices. So watch that 25, 145-ish area. You mentioned the S&P. So let's go take a look. Let's go take a look at a few of the indices out here. You've got to bear with me. I apologize because the way that I have to set these charts up so that I can go ahead and post them in here so that you can see them is a bit cumbersome. Now we've got the S&P 500 and Stevie's red line, and you can see that from a price standpoint, we're trading just slightly above it. About 27.15 is the number. We're at 27.17. Now, this is really going to be important, muy importante. If you notice the very bottom panel of my screen, that's the price oscillator. Here's where I do use moving averages. I'm using moving averages of the price data which in essence is like the MACD tool, as long as it will accept exponential moving averages. And when that is at the zero line is when it provides you and I with the most amount of information. And what we can see is that the decline that we saw over last week, what it did was it took that price oscillator down to the zero level. Right now we're trading just below it. We're at minus 1.52. If this is a counter trend rally, and I can't rule that out. Again, this is where tools can get you all messed up if you use too many of them. But here's where that additional confirmation of a bullish message occurs. And it could just simply be today. You close above 27.15. Then what you have is you now have a rising price oscillator, almost above zero, but should get above zero. And there is your switch to saying, okay, this is much more than a counter trend rally. And what happens if it deflects lower? Well, quite frankly, that counter trend rally signal would really be its message. But the way that you do that is you've also got to go take a look at, what's going on inside the other indices as well, such as the NDX 100. So let's go take a look at the NDX 100 since Bill mentioned Stevie's red line. Let's go find where it's trading at, because my question to you would be, do you think that the NDX 100 can go ahead and pull markets higher? And if we take a look at it as we post its chart, whoops, that didn't work real well. Here we go. You can see that price yesterday hit Stevie's red line, and price today is now above it. And by above it, we're talking about the 66.96-ish area. We're trading at 67.59, and its message here clearly is on the bullish side. So just simply continue to watch those levels that we just looked at inside of the Dow, inside of the S&P, inside of the NASDAQ 100, and watch to see if price, in fact, closes above those. And by the way, I know somebody out there is saying, well, come on, Steve-O, you've got to give us all the information. You can't be sitting in Hawaii and only give us part of the information. You've got to give me the information on the Russell 2000. Because if there's ever two indices that you want to draft behind, or you're looking for a message, bullish or bearish, it would be those two. You really want those two out in front. And although somebody might take a look at the Russell 2000 and say, hey, its move has been somewhat muted, I would say, but where's price trading in relation to Stevie's red line, which, by the way, is at 1522.60 right now. Inside the Russell 2000, it's at 1529.40. If you don't have to believe me, in fact, you shouldn't believe me. I'd like you to believe me. You can trust me. That you absolutely can. But go back and explore the work yourselves. Newsletter subscribers, they've got access to this information. Those that use the Thinkers from a platform have access to Stevie's red line. If you use NinjaTrader, you can purchase that tool as well. It's an awesome tool for helping you to be able to measure the psychology of the market, to just simply be able to use some information that puts the probability on your side. And isn't that what it's really all about? Look, you and I cannot control what the markets are going to do in the next moment. Whether it's some type of world event, whatever it might be, anything can happen. And therefore, we use stops. And we take whichever side of the trade it is that we're on, and we're very disciplined. The key is being a disciplined trader. It doesn't matter to me whether you're long or whether you're short, or as long as you use stops. There's still that individual that sends me messages periodically to let me know that they believe, because I don't know if it's a he or she, unwilling to give me their real name or come on the air and discuss this, but they are suggesting the S&P is headed to 666. And I don't have a problem with somebody having that belief. Why should I? Because I can't guarantee that it won't. I just say whatever it is your belief and however it is that you trade, just do one thing. One thing only, Vasily, and that is make sure you have stops in place. Okay? There's no problem in being wrong on the trade. The problem is, right, staying wrong on the trade when everything is just simply when, and you've got to trade with stop. I don't care if it's a mental stop. I don't care if it's a percentage stop. just simply use some type of stop. So we all hear about the Russell 2000. We'll conclude with this. Trading above Stevie's red line out there. It's got a rising oscillator now. So does the NDX 100. The S&P is kind of testing that area. And the Dow, well, actually the S&P is just slightly above Stevie's red line as well. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
So we'll go ahead and conclude the show today with a question sent in from Adi. And Adi wants to take a look at First Solar. So Adi is looking for a long-term buy for a 1-year period of time. So as we take a look at this chart here for First Solar, we're going to notice that it looks really good on a weekly basis. And we say that that's the center area of the charts that were posted. That's the weekly profile, 62.57, prices at 65.15. So that's a nice bullish message. Price is well above the monthly profile. That's at 45.32. But in the case of the daily profile here, Adi, First Solar, and I'm going to go ahead and maybe just try to blow this chart up on our screen and go ahead and post this for you as well, because I really think it's the daily that you're going to try to focus on and try to figure out and look for some type of bottom on it. So here's what we know right now. Price has found resistance at the bottom of its box on a daily basis, and that is 65.61. And if price continues to find resistance there, then that tells me that price may pull back to its breakout area. And what you'll notice, if you're looking about the center of this daily chart that we posted, Takes you to October 27th, when this busted out to the upside, accelerated volume, wide price spread, exactly what you like to see on a breakout move. And that was at a price level from 51.71 at the low to 58.97. The volume there, almost 16 million shares. So if price cannot close above the bottom of its past market profile, it would suggest to you and I that price could be gunning to come back and test that breakout area. Now, that breakout area, I gave you those numbers. I would be more focused on the 51.71 level or the 48.08, because that is where that gap is. And all gaps are your friends. They are your friends. So that's where you might see the nice buy inside of First Solar. What happens if it closes above 65, 61? Well, then the buy might have been just a few days ago. So, folks, aloha from Hawaii. I'll be back in the full-time saddle come next Wednesday. I won't be with you tomorrow. Won't be with you on Monday, I believe. I'll do the best I can. But if not, I'll come next Wednesday. Have a great day, a great weekend. And we'll talk to you soon. Bye-bye now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.